Hello everybody. Today I'm going to review the Zoom company, which the ticker name is Zoom. Myself, Pramod Kumar. I'm a CFA charter holder and FRM certified. In my YouTube channel, I cover the company stocks and provide my opinion on that. My opinion is based on the 10K or 10Q, basically on the fundamental review of the company, and I also see how the economics going on and just trying to put my opinion from the long-term perspective only, right? So today Zoom announced their results, and I have noticed, and it's pretty beat the analyst expectations. So I thought why, and I was also thinking about this. So let's see how this my review on this. Okay. So this is not a very old company. This is a pretty fresh new companies. I'll quickly, basically, honestly, go over the financial data on this one, and then I'll go over how much their revenue is. Basically, is their revenue coming from the small customers, or is there a pretty big customer? So the baseline, what I have set is the 100K, right? How many customers are getting the revenue over 100K? So that's one aspect. Then we'll go on to the risk factors, and then we'll try to form our my opinion based on the seeing on the data. On the financial growth perspective, as you know, I'll go deeply into the income statements and other required financial statements. For example, here I'll also go on to the free cash flow, right? Because that's very important, because how the company is growing, I need to ensure that the company is also at the same time converting that and have a good amount of a cash. Okay, so from the, and if you are new to my channel, I request kindly subscribe and like this video. If you like this video, I do have some other video on my channel, right, on the Nike, Apple, and so on. You can search and provide my fundamental review on that. Okay, so let's get started. Okay, so the financial growth perspective, the revenue growth in this company is from 2017 to 2019 is grown 9 times, and that's huge, right? It's not like I'm talking about like 1 or 2 or 20 or 30%. Is in terms of the is X times. So if I go to the financial statement, there, I think it is on, sorry, it's on 37, I think, or 38. Yeah, here. So if I go on to their 10K of the company, and here you see in 2017 they only have 60 million in these are in thousand, right? So 60 million of the revenue, and in 2020, just in a few years time, it grows by almost 10 times, right? 10x, if you can see here. So similarly, I do see their cost of the gross profit margin is good, but, and also when I see from their net income perspective, so on the net income perspective, they were negative in 2017, but this company really took off during the coronavirus times, and many people adapted to on this platform. Although we do have some other platform available, for example, which allows the video chat, the professional ones, which the company mentions in their competitors are like a WebEx from Cisco and some other companies, but I believe they are pretty doing good in terms of the marketing. So, and I have used as well, not like I have personally bought it, but from I got a link for the group room and chat, and then I'll just basically listen and participate. So overall wise, I think it's pretty okay, but you'll see here the net income. So this year they're making the 25 million in terms of the net income, when the revenue is around almost 6 billion, right? So you can see the spike there. Okay, on the earnings side, right? So if I go on the earnings side, on the per share, it was negative, but in here, this year it's making 9 cents per share. So basically, if you bought one share, and you are earning that on one share only 9 cents, right? So that's their conversion rate. Okay, so but on the revenue side, it's growing very well, and let's see some more, right? Okay, how about the free cash flow? So then another important aspect, as I mentioned earlier, the free cash flow growth. So it's not only the company is growing, but they are also having good in terms of the cash flow. So in order to see that, let's see. I'll show you the numbers as well. So here on the screen, you are seeing the company free cash flow, and you have seen this is from 2018 to 2020. It's over 10 times, right? So that's very good. So as you know, the free cash flow is basically if you take buy the company and you pay off all its debts and everything, that's what this cash flow is left. Basically, this is coming as $113 million, right? So which is good, right? So this means from the short-term liquidity perspective, the company has no issues and all. So that's what it's telling us. So from the financial, because the company is very new and basically it gets spiked. If I not forget, and when the company IPO was only $21, and but now it's like a $58 billion company because of its share price, right? So if you want to go and buy the company, you have to pay $58 billion dollars. But if you're trying to get from the value investment perspective, then you only have $113 million, right? But this company, I don't think so. We should think from the value perspective. This is more right now more from the growth perspective, right? So think from that angle, because that's how it's in the growth stage. Okay, so let's go to the next point. Okay, now another important point is which is in my mind was why I took this from there. So because if you go to the company website, it has mostly how their company is growing, right? So company is basically giving the platform as for the free users, right? And more and people, that's their model. So more and people are using, and they are thinking they will convert into the paid subscription model. So that's one aspect. But usually during that model, right, not many people get converted. And even if that converted maybe is a group of 1 or 2 people, I don't want that collecting like a chillers from so many diverse customer base. So they should have proper organizations. They haven't listed out the name, maybe because of the privacy concern. But I do notice as a benchmark that if as you can notice on the screen, they do have the good number of customer base who's paying over 100K in terms of the trailing 12-month revenue, right? So, but think this way, they have that's a yearly cost, right? So this is a 6. So it grows from 2018 to 2020. It goes from 143, which was in 2018, and then it's 344 and 641 customer base, right? So that's what what is mentioned here. Rapid penetration, including the large and including enterprise. So which includes maybe the large customers base or some enterprise, they might get a contract. So if I see from very high level, okay, the company is very good in terms of beating the analyst quarter by quarter or year by year. They are having a good customer base. They have a good, strong the financial statements. That's what is good. So now what next? Let's see some of the now the risk perspective as well, right? So from the risk factor perspective, right, I listed few points here. Okay, so the first point I like to show it to you, the PE is too high. I'll show you the how high is their PEs. So just the people who don't know what's the PEs. P is basically the price over earning ratio. How much for that earning per share, which is a 9 cents, how much a price you are paying. So that's the number of times in terms of the ratio, right? Can you guess? Maybe meanwhile I'll try to bring the slide up. Is it 100, or do you think 200, 300, 400? What do you think? Okay, now I'm on the Yahoo Finance. As you know, this is a free website. It has the right now the share price today. The market is seems already closed. Is $210. The market cap is already going to touch $60 billion. But you notice here the price over earning ratio, which is 6,010, which is insane. Honestly, insane. That's a lot of. That's a lot, right? Do you think that it has that much of a growth? So for this, I think the company is really overpriced if I'll see just from that, right? So if you compare that with another companies, right, then like even the high tech companies, they don't have that much. The next important factor which I have highlighted is, because I just don't like to go on the PE only, on the security side. So I recently in the past there is a lot of security problems happening, and then I also watched the interview of its CEO. He's saying he's taking secure measures, but I find this good article here. So here we can see that, for example, May 7, the New York Attorney General closes inquiry into Zoom, right? So even the New York Attorney General has the inquiry on Zoom to use, so they are lifting the ban on the education purpose, but on the Connecticut attorney, it's still going on, right? And also in the articles, notice that maybe hackers easily hack the Zoom calls, and when somebody talking to their parents, it's you can read here, right, pretty adult content, it get posted, bombarded, and also which is daily meeting from 10 millions and all, right? So on the privacy perspective, it's breaking and all is not good. They are working on it. Maybe it's because the company suddenly booms, right, because of the coronavirus outbreaks, right? Here, the Intel also put in their report that Zoom could be vulnerable to the foreign surveillance, right? So it's not good for the securities and all. So that's one point need to be think, right, from the security, and that's pretty big. If they really want to grow there from on the corporation side, especially, nobody wants on the corporate call or even on the personal call, right? When you are paying somebody, you want the content to be secure, right? So that's actually at least it's big for me, and I believe it's big for many other people as well. So next other thing which I like to highlight here is the research and development is overseas. Okay, so research and development can be happen anywhere, that's not a problem, but they are mostly I prefer to be on the in-house, the research and development. So you have their capability, you can have the development going on offshore, that's not a problem. But one more important factors which maybe I'll highlight to you, that it's mentioned in their that the research and development, it's in basically in China, right? And it has over 700 employees there. So given the time, right, now the time and the situation between US and China is very shady, and it's not very good. So that many kind of employees there, 700 employees, is not too small, it's very big. So if their research facility in terms of their growth, it in terms of other factor, it's a fact as well, right? Okay, so just for the confirmation, I'm showing here from their 10Ks, they say we also operate research and development center in China, employing over 700 employees as of January 31st, 2020, right? So that's pretty heavy in terms of the number, right? So, right, depend upon the situations, how it's pretty bad going in right now. The economics not going well. And the next thing is basically, if we see now, we have seen most of the risk factor, right? High growth, security, research. That's now say, if even if we keep this aside, okay, COVID-19, most of their growth comes from COVID-19. That's one thing, right? But not only that, like, let me review again with you their the income statement, just to show one point more. So as you can see on the screen, this is their income statement. Look at the marketing cost here, right? It's also increased from 31 million to 3.4 billion dollars, right? So over 10 times, right? So this means the company is heavily invested into the market and sales. So this means there is very spread in terms of the word of mouth, or maybe it's happening but not that much. So the company is really struggling to increase their customer base, right? So they have to very heavy invested in sales and marketing. Although given this is not a normal period, this is a coronavirus period, right? When people are looking for the platform which provides them this kind of a facility. So the product wise, I heard people use, and I use minimum honestly this product, not on the official, but just on the casual communication wise, the product is okay, but right, but this is pretty big for me as well. So now forming the opinion on this one, right? If I'll come to forming the opinion, so what I think the company is pretty basic in terms of they just have one video conferencing, right? Nothing much they can have in terms of room and all. I didn't see much growth from the long-term perspective, honestly speaking, and given that the share price is already too high and the P is too high. Of course, in the short terms, if you maybe because of few months, very short term, near terms, maybe the share price might go a little bit more earning up because of the coronavirus, more people stays in, but I definitely won't see this company as a long-term growth or investment perspective. Or you never know, maybe I also notice whenever the share price goes up, the internal CEO and management, they sell the shares very heavily, right? And now the share price is even going further. So if the internal company is also not people are not confident as well, then, but that's my opinion on this one. So let me know how you like this video, and I do have other videos in my channel, and in my channel. So hopefully you will like that. If you like new to the channel, kindly subscribe. And just one minor request, my son, who is very young, he also started the basically just reading books and more on the learning side, right? He's just in the grade 2. So I'll put the link on his channel as well. If you like, kindly make your kids you subscribe to that channel as well. So the more and more kids like and learning will be going forward. So his channel name is Sadiq World, and the link will be there. And if you're new to my channel, if you like, please promote, so the Google algorithm will know this, and more people will get the benefit out of these. Okay, if you want me to cover any other video, please put in the comments, and I'll ensure I'll try to cover that and put in my list. Thanks you for watching. See you soon in next video. Bye for now.